Hi, everyone. Happy New Year. This is John Vecchio from Hidden Profits. And today I want to talk to you about Apple stock. For 2019, I wrote a report that's coming out soon, so keep your eyes peeled, of 10 stocks that I think could be very damaging to your portfolio in 2019 and beyond. And I call those stock clunkers. And Apple's one of them. And it's been on my mind because the stock shit the bed last week due to lower guidance related to iPhone sales, particularly in China. And I wanted to explain why I think it could be a clunker for this year and beyond. The first reason is that a couple months ago, the company announced that they're going to stop reporting iPhone unit sales. And the CFO said that there's no correlation between the company's iPhone unit sales and the price of the stock. And that's an absolutely ridiculous statement. For years, people have been falling all over themselves to determine how many iPhones the company's going to sell from quarter to quarter. And the only reason why Apple did okay a couple quarters ago is that the average selling price was about $50 higher than what everyone expected. The iPhone unit sales were actually a bit disappointing. And so if there was ever a playbook about forensic accounting and understanding when companies may be in trouble, page 1, paragraph 1, rule number 1 would be when companies stop reporting information that they used to report, particularly information that was useful, that's a massive red flag. So less transparency is not a good thing. And sure enough, they announced they're going to stop reporting this information, and they drop a bomb really in the beginning of 2019. So they start off on the wrong foot by providing less useful information than they had in the past. The second problem is that Apple had a massive buyback in the middle of 2018, which they announced is roughly $100 billion, give or take. And buybacks can be good if the company's buying back cheap stock. In this case, obviously, they're buying back overvalued stock, or they certainly announced the buyback when the stock was inflated. So that's also a red flag. In addition, it sort of reeks a little bit of financial engineering. So you have a company that's starting to report less information, key information about a product that everyone is very hyper-focused on from quarter to quarter. They are buying back stock, which allows them to report higher earnings per share because there's fewer shares outstanding, so the EPS actually goes up. In this case, the stock was inflated because the stock price is now at an 18-month low. So that's sort of reeking of financial engineering. That's a big concern. And then the third concern is that the stock is overowned. Basically, everybody owns it. You may not own it directly, but if you own any mutual funds, exchange-traded funds, index funds, chances are you own shares of Apple and you're exposed to it. And in the last 10 years or so, we've had a massive bubble in passive investing, basically a lot of money that's gone into index funds and other passive strategies and come out of active strategies. And the problem with passive strategies is that they buy every stock that's in the index. It's sort of indiscriminate. They have to buy every stock that's in the index. And really, for the last 10 years, we've only seen money come in and never come out. So what happens when everyone runs for the exits at the same time and you have the most overowned stock in the entire world? That happens to be Apple. Somebody has to be the most overowned stock in the world, and that's Apple. We haven't really seen what happens in a true panic where everyone wants to get liquid, get to cash very fast all at once. Well, that money has to come out of somewhere, and that's going to hurt Apple's stock because everyone owns it. Whereas companies that maybe are not overowned in an index, maybe are not even in an index, will be more insulated from any sort of mad dash. So less transparency, more financial engineering, overowned is not a recipe for a stock that's going to outperform. And therefore, Apple is one of my 10 clunkers for 2019 and beyond. Keep your eyes peeled the next couple of weeks for the report, and you'll see the other stocks as well. Until then, I'll see you around. Take care.